Welcome back to course number 5, Credit Scores and Reports. In this lecture, we'll focus on credit reports, what they are, why they matter, and how they play a critical role in shaping your financial future. By the end, you'll know how to access your credit report, what information it contains, and how to use it to your advantage. A credit report is a detailed record of your borrowing history. It contains information about your credit accounts, payment history, balances, and inquiries made by lenders. In the United States, credit reports are maintained by three major bureaus: Experian, Equifax, and TransUnion. Think of your credit report as your financial resume. It summarizes how you have managed money and debt over time. Credit reports are important because they are the foundation for calculating your credit score. Lenders, landlords, insurers, and even some employers use credit reports to decide whether to trust you financially. For example, before giving you a credit card, a bank will review your report to see how you've handled debt in the past. A positive report opens doors, while a negative one may mean higher interest rates or outright denials. A typical credit report includes several key sections. First, personal information like your name, address, and social security number. Second, account history, which lists all your credit cards, loans, and payment records. Third, public records, such as bankruptcies or foreclosures. Finally, inquiries, which show when lenders or others have checked your credit. Each part tells a story about your financial habits and reliability. Your credit report and credit score are connected but not the same thing. The report is the raw data, your full borrowing history, while the score is a number that summarizes it. For instance, if your report shows consistent on-time payments, your score will likely be higher. If it shows late payments or large debts, your score will drop. Understanding your credit report helps you understand the why behind your credit score. One of the risks with credit reports is that errors can happen. These might include accounts that don't belong to you, incorrect balances, or outdated negative marks. Even small mistakes can harm your credit score and cost you money in higher interest. That's why it's important to check your credit report regularly and dispute any errors you find. Under federal law, you are entitled to a free credit report every year from each of the three bureaus at annualcreditreport.com. Let's imagine a student named Jordan. Jordan applies for an apartment, but the landlord denies the application because of a missed payment listed on the credit report. After checking the report, Jordan realizes it was an error from a closed account. By disputing the mistake with the credit bureau, Jordan clears the report and successfully secures housing. This example shows how important it is to monitor your credit report for accuracy. For students, credit reports are not just about catching errors, they are also learning tools. By reviewing your report, you can see how your actions affect your financial reputation. Did paying that credit card bill on time help? Did carrying a large balance hurt? Looking at your report is like reviewing feedback on a paper. It shows what you're doing well and what needs improvement. Because your credit report contains sensitive personal information, protecting it is critical. Avoid sharing personal details unnecessarily, use strong passwords for financial accounts, and watch out for identity theft. If someone steals your identity, they could open accounts in your name, damaging your credit. Monitoring your credit report is one of the best ways to catch identity theft early. To sum up, your credit report is your financial story. It records your borrowing and repayment history and influences your credit score. It's used by lenders, landlords, and employers to judge reliability. By checking your report regularly, disputing errors, and learning from what it shows, you can take control of your financial future. This concludes our discussion about the role of credit reports. In the next lesson, we will learn about the behaviors that build or harm credit score. See you then.